Welcome to our almost monthly uranium reports at myfinancesteacher.org. I will look at technical charts and most relevant fundamental developments in the industry. Only the first part is available publicly on YouTube. For wealth more information on uranium, join us at myfinancesteacher.org, where perhaps in the next 1 or 2 days I'll have the second part coming up as well. Starting with the technicals, cycles is an important part of technical analysis. So you do want to identify cycles in uranium. So here's how I see them. Over the last 3 to 4 years, every cycle rally has been confirmed by a break above the 50-day moving average. And at the same time, we've seen the 14-day RSI, again, cycle from oversold all the way up to overbought. In addition to that, every decline down into the cycle low, down into the end of the cycle, has also been confirmed by a break below the 50-day moving average. And again, cycling of RSI from overbought all the way down into oversold. These are some examples of a range of technical indicators that might help you to identify cycles in uranium. So looking at history, again, at least over the last 3 to 4 years, the average cycle duration is 158 days long, so just under half a year. But it looks like this average duration fluctuates quite a lot, from the shortest cycle of 104 days to the longest cycle of 249 days. Our previous uranium report was at this point on the chart, the red circle over here, where I actually said that the uranium cycle was declining down into the cycle low. By now, it looks like the cycle low has been achieved, so it looks like the cycle has ended with a bit of a double bottom over here. But on the other hand, we haven't seen a technical confirmation of that yet. So let's zoom in a little. So here we're looking at this current cycle since the very beginning of 2022. We see that RSI is already recovering, and that is generally a good sign. And based on average duration of the cycle, it looks like the cycle has likely ended either after 141 days or 196 days, as these two show a bit of a double bottom over here. But the end of that cycle from the beginning of 2022 and a rally into a new cycle hasn't been confirmed technically yet. It will be confirmed technically when the uranium price breaks above the 50-day moving average. So without that confirmation yet, I generally see a couple of scenarios. The first scenario, which is bearish only in the short term, is based on this descending triangle. And technically, descending triangles more often break to the downside rather than to the upside. So if this descending triangle plays out as they usually do, we'll see uranium price break down. And in that case, the target would be based on the height of this triangle, somewhere around $8. So $8 down from around $46. That brings us actually pretty close to that support zone from the October 2021 low, somewhere around $38. That would then bring us to the cycle low, and a start of a rally into a new cycle would take place after that. That would extend the cycle duration to somewhere above 200 days. It's not impossible, it has actually happened in the past, but it's pretty long, so the likelihood of that is not extremely high in my opinion. I would perhaps give this scenario, say, 35% chance, giving me somewhere around 60 to 65% chance of a breakout, of a break up from this descending triangle into a new cycle. But again, nobody knows the future, I just try to share my views with you. So in return, tell me, do you see uranium prices around $60 into, say, September this year, or more like $40? Let me know down in the comments below, and we continue. Looking at the URA, the producers, uranium producers. If you again go back to that previous uranium report from May, by the way, link is down in the description and also at the top of your screen right now. That was somewhere in the first half of May, on the 13th of May as far as I remember. And as I mentioned in that report, URA was likely to continue down, somewhere down into the support zone based on early 2021 high in January and the August 2021 low. Since then, that's more or less exactly what URA has done, and the question is now if a new cycle is about to start. Again, we haven't seen technical confirmation of that yet. But talking about technicals, you could actually draw a descending wedge over here, which more often, statistically, historically, break to the upside. So that is another positive sign here. Next, as cycles are closely related to market sentiment, let's have a look at my way of trying to measure the market sentiment in uranium industry, where we look at the ratio of producers to uranium price, URA versus uranium price. Again, I've looked at this chart back in the previous report as well, and perhaps when this ratio reaches somewhere around 0.4, that's where uranium producers are too cheap compared to the actual price of uranium. And when this ratio is well above 0.7, that's at least over the last few years, but historically when this ratio is well above 0.8 or above 1, that's when producers are somewhat too hot compared to the uranium price itself. And what do we see here? Over the last few weeks we have seen a couple of pokes down into oversold, which perhaps again indicates the likelihood of that second scenario where we have already seen the cycle low. But in either case, we have to admit that since around April this year, it's been kind of difficult to stay invested in uranium and uranium miners. And one thing that can help investors to stay patient, it's going to take time for uranium industry to produce the amazing gains that I'm sure it can. One thing that can help you stay patient is understanding the fundamentals. It's those fundamentals that illustrate such an outstanding potential for gains in uranium. But again, those gains are going to take time, perhaps 1 or 2 or 3 years into the future. We'll start with a bit of these fundamentally important developments in the industry in this first part, and again, a wealth more information is upcoming to the members at myfinanceteacher.org over the next couple of days. Let's start with looking at uranium production. We're looking at this line over here, total production in the whole world. You notice that all the way since 2016, this production has actually been on the decline. Yeah, there were sometimes minor bumps in the production, as in 2019, for example, or in 2021. But those were minor, and the downtrend still continues all the way back from 2016. And this decline in production, decline in supply, wouldn't be as much of a bullish development if, let's say, demand for uranium was declining as well. But as the shock from 2011 Fukushima disaster is wearing off, the demand is not falling anymore. Instead, demand is growing. And if you look at this bottom line over here in percentages, the mine production, the uranium production as a percentage of global demand keeps dropping. So the supply shortages are either already here or are definitely going to take place sometime into the future. Again, as I said, perhaps over the next 1 to 2 to 3 years. Here's an outlook going all the way up to 2035. And even though production is expected to increase over the next decade, demand is still far above those production capabilities. And this difference between the green line and red line for demand, which is the inventory, as you see, inventories that the generators, the utilities, the power generators are holding are going to dwindle, especially as soon as, again, over the next couple of years. And importantly, notice that this is existing production and demand. But in addition to that, there are a lot of power generators, power reactors, nuclear reactors that are being built right now. China, for example, is building quite a lot of them with huge capacities, dwarfing the second and third places of South Korea and India. So to reiterate, a lot of countries are building additional nuclear reactors, so demand for uranium is going sky high. Again, perhaps not tomorrow, but sometime in a relatively near future, over the next few years. So coming back to these demand projections into 2035, we see demand increasing by something around 13% over the next 3 decades. But that doesn't take into account the push for cutting CO2 emissions. If you take into account net zero CO2 emissions scenario, this demand in percentage terms actually increases by double the amount of the previous chart. It increases by something around 36% over those same next 3 decades. So we try to compare like for like into 2035 on this chart, where demand rises by 13-14%, with 2035 on this chart, which takes into account net zero CO2 emissions scenario, where demand from both OECD and non-OECD countries increases by closer to 36, 37, 38%, rather than that 13-14% into 2035. But again, that's over the next decade. You also want to see what's happening right now that's going to affect the industry perhaps over the next 1 to 2 to 3 years. And that's part of what we're going to do in the second part of this uranium report, which will be available for the members at myfinanceteacher.org, where the membership is only $10 a month, which is basically nothing. I think just these uranium reports are worth the membership fee beyond all of the regular updates I provide on a range of assets. Plus, the first month is only $5, which is again basically nothing in the ongoing inflationary environment. So that's myfinanceteacher.org. Have a nice weekend. Bye-bye.